Hi friends. An auditor should not accept an audit engagement if there is a substantial conflict of interest. And if there is a conflict of interest, he should disclose it. Now, what is substantial conflict of interest? The auditing standard on audit engagements, CSAS 1 issued by Institute of Company Secretaries of India, and Standard on Auditing 220 issued by Institute of Chartered Accountant of India, defines three conditions for conflict of interest, identifying conflict of interest. And if the auditor exceeds those limits specified in these three conditions, then it shall be called substantial conflict of interest. In such a case, he should not accept the audit engagement. Now let's see the conditions. Condition number 1 is 2% of paid up share capital or nominal value of shares exceeding 50,000 rupees. This 2% is exceeding 2%, whichever is less, or more than 2% of voting power. Now, this condition is not only for the individual auditor, it is for his partner, or his spouse, or his parents, or his siblings, or his children, or the children of his spouse who is financially dependent on him. So, let's see an example. If the auditor is holding 1% of share and his spouse is holding shares 0.5% share, but the value of share is 60,000 rupees. In that case, the condition, he crosses that condition of rupees 50,000 rupees. That 60,000 is exceeding 50,000, so it's a substantial conflict of interest. He cannot accept that. If his partner, one of his partners is holding 2.5% of shares and the nominal value of share is 40,000 rupees. But since the holding is more than 2%, he cannot accept it. That is the first condition. So there is a substantial conflict of interest. Now the second condition is the auditor is indebted to the auditee for an amount exceeding 5 lakh rupees. Now if he has taken a loan, suppose he has taken a loan for 6 lakh rupees. So there is an indebtedness. He cannot accept the audit engagement since it is a conflict of interest. But even if the amount is less than 5 lakh, if any indebtedness that may severely impair his independence. That means even if the amount is less than 5 lakh, if that severely affects his independence on making an audit report, then he should not accept it. But that is wholly dependent on the auditor by the time of accepting whether that affects his independence or not. In such a cases, he should not accept the audit engagement. It is a conflict of interest. But there is an exemption for that. The exemption says that if the loan indebtedness is due to has taken as in the normal course of business, like a banking company or an NBFC, if he has taken a loan, the NBFC's normal course of business is giving loan to the individuals, loan to public for an interest. And if he has also taken a loan on the same terms and conditions and the same interest rate, then it is not called a conflict of interest or substantial conflict of interest. Now the third condition is the auditor was in employment of the auditee and 2 years has not lapsed after he retiring from that organization. That means a cooling period of 2 years should be there. If that 2 year is not lapsed, it is a substantial conflict of interest and he cannot accept the audit engagement. This is for the partner or any member of the firm. If it is a firm, any member or a partner of that firm, if he was in employment of that auditee, then he should not take if he has not lapsed 2 years. But if that auditor has joined as an employee of this firm, then that condition is not applicable since he is an employee as he is not going to sign the audit report. So in these three conditions, 2% of paid up share capital or 50,000 rupees of nominal value, whichever is less, or 2% of voting power, more than, or indebted to the company for more than 5 lakh rupees, or was in employment and 2 years has not lapsed. If any of these conditions satisfies, then it is called a substantial conflict of interest. In such cases, the auditor should not accept the audit engagement. And if any of these conditions are there but are within those limits, that means he is not crossing the 2% paid up share capital or nominal value of 50,000 or 2% voting power, or indebtedness is there but it is within 5 lakh rupees, or it is not seriously affecting his independence, and 2 years has lapsed since he has retired from that organization, then it is a conflict of interest. In such cases, he should disclose his conflict of interest while writing his acceptance to the company.